morning, you're watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading day. Let's kick off with our top story. President Rodrigo Duterte has ordered the economic team to find ways to encourage local companies to venture into vaccine manufacturing. With no end in sight for the pandemic and with the Philippines finding itself at the losing end of the global battle for vaccine supply, the government is looking to attract vaccine makers to set up shop here. Most of the shots that arrived in the country have so far been donations, as the government has yet to receive the jabs it ordered, with most of the world's vaccine supply cornered by first world nations. Budget Secretary Wendell Abisado told the Philippine Star that it would bode well for the Philippines to depend less on global supply. Abisado added that the government is looking to implement austerity measures to fund additional subsidies to lockdown hit families. He said finding new sources of funding has become more imperative. In the event, other regions may also have to be placed under ECQ as COVID-19 cases continue to rise. But Abisado said while the economic team agrees with the need for a supplemental budget, it is first looking into domestic sources of funding that can be mobilized for pandemic response to limit borrowings. Now, exports continued to fall in the month of February. Preliminary data from the Philippine Statistics Authority showed that exports contracted by 2.3% year-on-year to $5.31 billion. Economists expected a rise of up to 2.7% for February. That's as exports contracted by 4.8% in January. Imports, meanwhile, in February rose by 2.7% year-on-year, while the trade deficit narrowed to $2.3 billion. Okay, guys, kicking off the markets report with a quick look on global equities over in Wall Street. U.S. equities actually drifted higher, bringing the S&P 500 to another record close. You can see that on my terminal here. Meanwhile, just a very quick peek on Asia Pacific. Earlier this morning, we did see stocks having quite a mixed open. It now seems to be tilted towards the back end here with the Nikkei 225 down by 0.5%. Kospi as well in the red. So not a very good start in terms of trade here, at least for the region. Now let's take a quick peek at our own local index. Seems to be following suit. You can see us down by 11.03 points. It's down by 0.2%. But nevertheless, we're still well above the 6,600 levels. Now recall that yesterday we had actually closed in the green. That was on the back of inflation coming in lower than analysts had expected, and share prices had rallied for the third straight day yesterday. That was the highest we've seen in at least 3 weeks. Now, this according to AAA Equities' Chris Mangon. He's saying that investors yesterday chose to be optimistic, and he said that the lack of selling was prompting bargain hunters to start looking for opportunities. Meanwhile, Timson Securities said that this was on the back of Asia stocks regionally also climbing to 3-week highs yesterday. This, he says, after the IMF lifted their outlook on the global growth forecast. Nevertheless, we still had quite some net foreign selling yesterday. That was around 670 million pesos that we lost to our foreign investors. Now, take a look at our daily chart here and who are moving. First Gen, best performer right now, that's up by 1.1%, followed by Pure Gold and Globe Telecom. These are some favored lockdown stocks. Meanwhile, you've got SM Prime pulling the weight downwards. That's down by 1.5%, together with URC and Ayala Corporation. Now, just to remind our viewers here that today is the last trading day of the week. Markets will be closed for trading tomorrow as we observe the day of Valor. And this, according to Timson Securities, significant support this week might be drawn at the 6,400 level. So let's see how markets will be performing today on the last trading day of this week. Meanwhile, let's check in on the other headlines we're keeping our eyes on. Today is the last day of the imposed price cap for selected pork and chicken products. The Agriculture Department says they will not extend the enforcement of the price ceiling for these commodities. Instead, the department will only implement suggested retail prices for imported pork as part of its efforts to augment supply and stabilize prices. Starting tomorrow, the SRP for pork shoulder or kasim will be set at 270 pesos per kilo, while pork belly or liempo will be at 350 pesos per kilo. Now, to address the current supply shortage, President Rodrigo Duterte has also signed an executive order to lower the tariffs on imported pork products for 1 year. This EO will temporarily lower import duties on fresh, chilled, or frozen pork from 30% to 5%, while the tariff rate for imported meat outside the quota will be reduced to 15%. Recall that Duterte asked Congress to increase the minimum access volume for pork imports by 350,000 metric tons this year. PEZA warns of possible investor exodus after a key provision of the Create law has been vetoed. The vetoed provision would have allowed existing registered businesses to apply for extended incentives for the same activity. However, the president called this fiscally irresponsible and unfair to taxpayers and enterprises without these incentives. Pesa said that vetoing this provision would force the registered businesses to make do with the 10-year sunset period after their income tax holiday lapses and graduate to the regular 25% CIT rate. The agency explained this could be a make or break scenario for the Philippines, as affected ecozone locators might just pack up and transfer to a more willing host country that can offer better investment incentives. With inoculations underway and an impending global recovery, the light at the end of the tunnel is in sight. But the question is, how much further must we go in this tunnel? Here to help us set the tone, we have with us Jonathan Ravelas, Chief Market Strategist of BDO. Good morning, sir, and welcome back.
Good morning, Danie.
Sir, let's kick off with the trade figures for the month of February. Exports contracting by 2.3%, another month of a downfall here, whereas analysts had been expecting a rebound, actually growth year on year by 2.7%. Tell us what's happening here. Is this in any way, this is February, no? So wala namang lockdowns na nangyari. Is this, supply chain driven, or is this a reflection of what's happening in the global economy?
Well, I think despite we've seen mass vaccinations in developed economies, most likely we will get to see that potential recovery in inflation trade in the globe. Hopefully, we should really see that creating a turning point in the second half of this year.
Okay, sir, just related to this, let's talk about the global recovery that is impending. You're saying that we will still feel the benefits in the second quarter of the year. Some analysts are saying that the global economy will not have a big impact on our own recovery because we're really domestically driven. To what extent are you, bullish on the fact that we can benefit from all of this optimism that's going around the world?
Well, basically, you have to remember that it's going to be more of the most of our exports are basically the electronics, and I guess as we move to the new normal, people will be more digitally connected, and eventually that would eventually give the rise to or will eventually contribute towards the potential recovery. And of course, if we really get to see the interest spending out of the U.S. Stimulus, and eventually things are going back to normal, then people will eventually try to the consumption pattern in the US will eventually recover, and that,
Especially BPOs, even the POGOs, etc. But now with some vetoed provisions, are you worried that we might not be able to bank on this sector, this outsourcing sector, to stay here in the country if right now the provisions have been vetoed?
well, basically, I guess that's the other side. That is a risk for those that are existing locators. But I guess for those potential investors in the Philippines, it's now an opportunity for them to look at the Philippines from a perspective post pandemic. Mainly because over the last few years, they've been waiting what would be the final version of train to, or what is known now as create. Now that it's there, plus you have the corporate income tax that has been lowered, then this should be an incentive for them to look into the Philippines. I guess highlighting the what has happened since the pandemic, it highlighted one of the major Achilles heel of the Philippine economy, which is agriculture. So this could eventually be an opportunity for investors to look into the Philippines.
Okay,
So
so this.
aside from that, IT-related businesses
Mhm.
could eventually look into the Philippines. So this is very timely, and this is something that's close to my heart, mainly because for the past 5 years, we've been trying to get ASEAN economies to look into the Philippines as a potential supply chain for electronics and other businesses. So
Mhm.
this is something that's very good for the Philippines.
Sir, some are saying that this the revenues from the Create bill would offset the expenses of lockdowns. Do you agree with this, or is it going to be revenue neutral and it's already been priced in the budget anyway?
Well, sad to say that when this bill was created, this was pre-pandemic. So we weren't expecting that our revenues would have been lowered. So offhand, for the first, I guess, for the next 1 to 2 years, we will take a hit on this. But
Okay.
again, if we will to look at the opportunities that most investors can look into the Philippines, this could be very positive, especially for the IT BPO sector, which last year has eventually kept its momentum, mainly because most of the services remain. No? So that to me is something that's very positive.
Sir, we are now nearing the end or supposed end, so to speak, of another severe lockdown. Tell us, are you expecting that this will not be the last? And if so, checking our budget balance here, how can we afford further lockdowns? You're talking offline about the fact that the government does have money to spend, but it is keeping it for the time when it needs to spend on infrastructure and job creation.
Well, I think let's try to take a step back. Let's look at the present situation that we're in. I think at the moment there are a lot of risks, and I would probably name them as ICU. One is inflation, the second is the COVID cases, and eventually the last is eventually unemployment. Last year, we eventually saw a very important sort of win. Over the last fourth quarter, we were able to bring down the cases. And what was worrisome in the last few weeks was basically having the fourth quarter cases equivalent to 1 week in March. So that was very significant. What we need to do is eventually try to bring it back to those levels. And the 2 week lockdown have helped, but the key question is it can be extended so that we can ensure we will not have another setback like this, just for precaution, especially that hospitals are overwhelmed with the number of cases. So
Mhm.
it's really a matter of trying to ensure this will not be a runaway in terms of COVID cases while we're slowly creating the vaccine momentum of vaccinating more people.
Okay,
So
so
to me, an extended lockdown might be ideal.
okay. And sir, finally, before we let you go, just checking in on the markets here, we've managed to sustain above 6,600 despite the ECQ. Is this reflective of the fundamental economy? Is this just, bargain hunting and sentiment spilling over from the rest of the global equities? And is our markets still cheaper compared to investing in other markets right now?
Well, the market in itself is uh, relatively relatively cheap, so to speak. I guess what the market, and we're in a consolidation between a level of 6.4 to probably around 6-7. I think that's the range that we're in, and the market is still pricing or trying to understand the three things I've mentioned: inflation, the rising cases, COVID, and eventually unemployment. So people are waiting for more signs whether we will accelerate above 6-7, and that could be triggered by only two things: improvement in the economy or improved earnings.
Okay, so
So
watch out for these two things.
In the meantime, that we're waiting for first quarter numbers and first quarter GDP. There, it just highlights that the market is still worried, and they're still looking at it more on a potential downside. If we take in the issue of inflation, it might have cooled to 4.5, but the reality is we still have the potential impact of the reflation trade globally. So there are three things to focus on, which I think I would probably say the initials is poor. One is pork prices. The second is oil.
Mm-hmm.
And eventually the last, which is basically the impact on the retail, is eventually more of less spending. So that
Okay.
eventually is more tilted to the downside. So unless there's something significant that would further bring down inflation, then we could probably break out of this consolidation. So I guess really looking at the economy and looking at the developments in the global economies. But just the same, the road to recovery points to three things. One is an epidemic management that remains very effective, which is basically focusing again on building confidence. So we need to be able to ensure that we're able to keep on the mask, hugas, iwas. The second is the timed stimulus that the government should do once we're out of the lockdown, which could be in infrastructure spending so that jobs will be created and will sort of create a jolt. The
Mm-hmm.
third is basically you and me being confident of going out again despite these new variants. And that can only mean the acceleration of the vaccine
Mm-hmm.
inoculations. So
Okay,
if
so
that materializes, then that should bring us way beyond the 6,700.
okay, so hopefully malapit na tayo dyan, Sir Kapit lang. And as you mentioned, the more consumer confidence needed to step out and spend for the economy. Thank you so much for those insights, Jonathan Ravelas of BDO.
You're welcome. Have a
And that's a first look into the business day. Today's Thursday, April 8, 2021. Catch Business World Live for the market closes at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, and stay safe, Philippines. We are One News.